Most people don't realize this. If you died tonight, your family couldn't get a single dollar out of your bank account. Not tomorrow, not next week. Doesn't matter if you have a will, a notary, or an estate plan drawn up by a big-shot attorney. None of those things matter at the bank counter. There's just one simple, often overlooked form that changes everything. A form the system conveniently never brings up. Here's why you've never heard about it. The banks, attorneys, notaries, they all have their workflows, their fees, their ways of doing things. They're wrapped up in a process that doesn't reward transparency about your options. If you ask someone at your bank about it, sometimes even they won't answer unless you ask the exact right way. I see this mismatch all the time. My name's Lona Maines, and I deal directly with the IRS for taxpayers. I've sat across from bank compliance officers, the IRS's agents, and real families who are lost in paperwork, trying to claim money that's supposed to be theirs. Week after week, I share what I know because this stuff changes lives. Let me be clear, bad investments can hurt you, but the most common, brutal financial disaster I witness isn't some foolish risk or even a tax slip. It's this. A family, already grieving, stands at the bank and finds out they're locked out of the money their loved one set aside. All because one silly piece of paperwork was missing. It's a form that costs nothing and takes 10 minutes to fill out. Yet most people never hear about it until it's too late. Why does the system work this way? You can thank the Uniform Probate Code. In 1969, a group of bigwig lawyers set up a system that split the legal world in two. Your physical stuff gets handled one way, your bank account's another. Every state eventually signed onto some version of this. Judges have been enforcing it ever since, and most people walk straight into the trap without even realizing. The contract you sign with your bank, that's what decides who gets the cash when you're gone. Not your will, not your trust, just that contract. If you fill out a beneficiary form at your bank, just a piece of paper that says, "When I die, give my money to so-and-so," that overrides anything else, even a meticulously detailed will with 11 witness signatures and 3 embossed seals. If there's no named beneficiary, the money slides right into your estate. The court system grabs hold, and you're off to probate court. Probate is not a quick fix. In most states, you're looking at a built-in creditor waiting period, 3 months, 6 months, or even longer. So anyone who might have a claim against your estate can raise their hand. Medical companies, credit card companies, even that weird bill collector who calls late at night, every one of them gets a shot. All the while, your bills keep coming. Your family faces funeral costs, and the grief doesn't pause just because the money is tied up. Let me tell you about Dorothy. She was a retired teacher in Illinois, 71, did everything by the book. After selling her home, she deposited $350,000 at her local bank. She paid a lawyer to write her a will, notarized it, everything. But she never filed a beneficiary form for her savings account. She told her kids, "Don't worry, it's all covered." Well, it wasn't. After Dorothy died, her kids, Michael and Sarah, tried to pay for the funeral. They brought her will and the death certificate to the bank, but the manager shook his head. No beneficiary on file. Doesn't matter what the will says. The $350,000 didn't move an inch. The cost of her funeral went right onto their credit cards, with sky-high interest. While Dorothy's money just sat there behind the glass, probate started rolling. There were court fees, public notices, bond premiums, and attorney's fees, all adding up to thousands. In the end, they waited 14 months and lost $12,000 to the process. It wasn't her fault. Nobody told Dorothy about the form. The system worked the way it's designed. There are 3 main ways people trip over this. The first, no beneficiary form on file. You opened an account years back, the banker smiled, and you signed the paperwork. You figured your will would sort it out. It won't. The will has 0 legal foothold at the bank. The default is probate every time. The second trap, the wrong beneficiary. Maybe you named an ex-spouse decades ago. Maybe a parent, now deceased. Doesn't matter what your latest will says. The bank looks at the name on the beneficiary form, not your current wishes. I've seen families torn apart by this one simple mistake. The third, joint accounts. Plenty of married folks assume everything will just go to their spouse. That's not always true. Only legally designated joint tenancy with right of survivorship does it, and that needs to be set up specifically. Just being married doesn't guarantee it. Here's a twist. A lot of people add their adult child to their account, thinking it's an easy way for them to handle things if something happens. But the law treats that child as a full co-owner right away. If your child gets sued, divorces, or skates on their taxes, your money is up for grabs, not what you had in mind. The fix? It's embarrassingly simple. One free form from your bank. It's called a Payable-on-Death, POD designation, and it cuts the whole court circus out of your family's lives. When you die, the POD says, "Here's who gets the money," and the bank listens. No court, no probate, no attorney fees, no waiting period. Your beneficiary needs only a death certificate, and in a few days, sometimes even the same day, the money lands where you want it. Now, I'll give you the details because half the work is just knowing where to look. Every FDIC-insured bank and every federally insured credit union must offer this. It costs nothing to file, nothing to maintain, but it only covers regular bank accounts, checking, savings, money market. Certificates of deposit, CDs, need their own POD forms, so if you've got a few, do one for each. Brokerage accounts need a TOD, transfer on death designation. Same concept, different form. Retirement accounts already have their own beneficiary forms, but you need to double check them. Old names can cause big trouble. Don't let an old ex inherit your IRA by accident. Safe deposit boxes are another hiccup. If your will or legal papers live in the box, your family can't get in after you die, even with the key. You need to add a joint renter so they don't get blocked. It's a tiny detail that can save a big headache. So, what should you do right now? Open your online banking or pull out your last statement. Look for that beneficiary field. If it's blank, the trap is already set. Head to the bank, in person tends to be best, and ask for the POD form. If the teller shrugs, ask for the manager. Bring the full legal name, date of birth, and social security number for your primary beneficiary. Add a contingent beneficiary in case the first one's not around. Repeat this for each account. Don't assume one covers them all. For brokerage assets, call your investment firm and file a TOD. Then, check and update retirement account beneficiaries through your plan administrator. Put a note in your calendar to review all these every few years or after any big life event to keep things current. Don't chalk this up as something you don't need or can do later. Too many families find out the hard way. Probate isn't broken, it's just not built for you. The system was designed decades ago to operate this way. The POD is the antidote. Take 10 minutes, spend $0, and make things a whole lot easier for your family. If you're tired of leaving thousands or tens of thousands on the table, look up the senior exemption playbook I put together. It pulls together all the breaks, refunds, and forms that can help, spelled out by state and account type, fast and simple. Bottom line, don't let the system decide what happens to your money. Grab the POD form, fill it out, and rest easier. I promise. This is one piece of paperwork you'll never regret handling today. If you like having this kind of info spelled out, stick around. There's more to share.